let's bring in our panel. Dan Henninger from the Wall Street Journal and Liz Peek, FoxNews.com columnist. Both are Fox contributors. Glad to have you with you, Dan and Liz. Dan, I'm going to start with you. So Jen Psaki talks about this as a routine meeting with this alphabet soup of regulators. I look at it and see the SEC being used to cudgel companies into getting on board with the Biden climate agenda. Your thoughts on that?
Well, it certainly looks like it to me. I mean, the SEC, this is really an extraordinary grab for federal power. I mean, the SEC basically is in charge of financial regulation, but to suddenly introduce the idea of including or requiring, and that's the big deal here, requiring or mandating climate metrics into the financial accounting of the largest corporations, I think it just creates a whole host of problems, both on the SEC side and on the corporate side, because metrics for climate are very amorphous. Financial accounting is extraordinarily precise. And a lot of these companies are going to ask, what are their shareholders going to think if they are making decisions based on the very sort of vague metrics that climate requires? And I would not be surprised, Brian, if eventually Congress stepped forward. The SEC has extraordinary power, but I think they're exceeding their mandate if they're going to try to require climate metrics in financial accounting.
And Liz, that's just it. Congress should step in. If we're going to do something on climate, that should be an issue for Congress and the voters who elected those members of Congress. The Biden administration right now is trying to do the classic end run of using the bureaucracy to do things the legislative branch should be doing. Am I right on that?
Absolutely. Remember that Biden promised an all-of-government approach to furthering various progressive goals, whether it was climate or equity in housing, things like that. So what we really have here is a group of financial regulators. I think this was the old Financial Oversight Board that was put in place after the housing crisis. And I must admit, it's not a good recollection, because a lot of what they're trying to do is put their thumb on issues about lending, on reporting, as Dan was just talking about, but basically getting financial institutions and their overseers to use their powers for various woke objectives. And honestly, I think, for example, in the case of the Fed, they have enough to do right now. Their mandate is inflation, controlling inflation, and boosting employment. Let's see them focus on that as opposed to equity and lending.
Yeah, you know, Dan, I think a lot of Americans would look at the Fed, for example, right now, to Liz's point, and say, you know what, I'm tired of paying really high prices for things. Quit telling me about what companies have to report on the climate, which isn't your job, SEC, and help us find a way out of these price increases. Dan, does this have political consequences if the Biden administration keeps pushing so far with this agenda and leaving voters out of it?
Yeah, obviously there are political implications, and especially let's talk about the presence of Fed Chairman Jay Powell in this meeting. I mean, presumably the Fed is an independent agency, but the signals and optics being sent here is that the Fed and the Fed chairman are on board, part of the Biden team in pursuing goals for things like climate. And yeah, I agree. People expect the Fed to be making independent judgments and not being simply sitting there at the table as one of the Biden team.
Dan and Liz, stay right there. I want to go to this. Airlines struggling to meet the demand of flyers post-pandemic. American Airlines is being forced to cancel hundreds of flights due to staffing issues. Some Delta customers told, get this, they'd have to wait 21 hours on hold to speak to an actual person. Fox News' David Lee Miller is at LaGuardia Airport in New York with more. David Lee.
Brian, we are in Terminal B, and as you can see, the COVID restrictions remain in place. Now, as for American Airlines, it anticipated that there was going to be a surge in the number of customers. It just happened a great deal sooner than they expected. According to American, they are now seeing a 600% increase in the number of travelers compared to the dark days of COVID. Now, in order to alleviate the stress on the system, American says it is going to cancel about 60 flights a day until mid-July. That's roughly 1% of its regular schedule. Not a big deal unless it's your flight. In a statement, the airline said, and I quote, we made targeted changes and the goal of impacting the fewest number of customers by adjusting flights in markets where we have multiple options for reaccommodation. The airline says there will not be any surprises. These cancellations are not going to be last minute, but they're going to be days in advance. Passengers rerouted outside a 4-hour window can receive a refund. The airline expects that the mandatory training of the furloughed pilots to be completed by the end of this month. And the airline also says it is cutting flights to increase the number of pilots in reserve. Worth noting, today alone, American canceled at least 148 flights. That's in addition to more than 300 this weekend. The airline has blamed the weather, a labor shortage, maintenance issues, and flight crews maxing out a number of hours for these latest cancellations. And to put all of this into perspective, a year ago on Sunday, yesterday, the TSA says there were about 500,000 passengers who were screened at airports. Yesterday, 1 year later, more than 2 million were screened, and according to the agency, that is the greatest number of passengers they have seen since the pandemic began. Brian.
David Lee Miller, thanks so much. Well, let's bring back Dan Henninger and Liz Peek. Liz, I'll go to you on this one. I was at the airport this morning. I heard some angry travelers. I have a feeling it had to do with some canceled flights. You know, we get angry at the airlines when the flight's canceled, but this one I trace all the way back to D.C., Liz. This is the labor shortage rearing its head again.
Yeah, I think it's pretty complicated. I think the unemployment benefits, the extra $300 a week, have certainly played a role in preventing people from coming back to work and all different kinds of businesses. I think also the Fed has really underestimated, maybe the financial planners and CEOs have underestimated. We had a jump in consumer net worth last year of $27 trillion. An awful lot of people have made money in the stock market and their homes. And when offered, as these airlines have done, an opportunity to retire, to trim their staff levels because they were so scared about the downturn, a lot of people retired. I think the Dallas Fed says 2.7 million Americans retired over the past year. So I think it's those two things that really are hurting not just airlines, all kinds of companies, and driving wages higher.
Yeah, Dan, the dysfunction in labor markets is widespread here. There is a silver lining, though. If you look at customer demand, people want to fly again. They want to get back out and go. This economy has significant legs, but going back to our earlier story, I think the concern is the Biden administration is going to cut those legs out as it ramps up regulation. How do you see it?
Well, personally, a couple points. I find David Lee Miller's report rather nerve-wracking. I mean, are there airline mechanics that they're having a hard time getting back, plus furloughed pilots? I mean, yeah, let's hope those planes are being well taken care of before they take off. Secondly, to Liz's point, the $300 unemployment insurance bonus, this probably was one of the worst economic decisions in many, many years. We're coming out of the pandemic. The pandemic disrupted work patterns. As she noted, there were a lot of retirements in the airline industry. And now we're trying to get the economy back on its feet. And the last thing we needed was an enormous disincentive for labor markets, which is creating problems through the supply chain all across the economy. It's all anybody talks about. And, September, it will run out. But that's a long way, several months before we have any hope of getting a labor market returning to anything resembling normalcy.
And it's all anyone talks about because it's everyone feeling the effects. Dan and Liz, thanks so much for your thoughts today. We appreciate it.
Thank you.
Sure thing.